What if one small aerospace company was sitting at the center of two of the most powerful demand forces in the world right now, a commercial aviation boom and a global missile rearmament wave? That company is Park Aerospace, ticker PKE, and their Q4 fiscal 2026 earnings call was packed with signals that most investors are still sleeping on. Here are the top 10 takeaways, counting down to the most important one. Number 10. Park has paid dividends for 41 consecutive years, returning over $613 million, nearly $30 per share, to shareholders since 2005. The next dividend will push that figure past $30 per share. This is a company that has quietly rewarded patient investors through pandemics, wars, and industry downturns without missing a single payment. Number 9. Park's capital allocation discipline stands out. Management bought back 718,000 shares at just $12.94 each when they believed the price was, in their own words, stupid low. They then raised $22.8 million through an at-the-market offering at $24.21 per share, buying low and raising high. That's a spread most companies can only dream about. Number 8. Despite importing the critical C2B fabric from France, tariffs have had a negligible impact on Park, just a few $1,000s this quarter. The company passes tariff costs through to customers via pricing contracts. That said, management has flagged the issue to the Department of Defense, pointing out the irony of tariffing materials needed to quadruple missile production. Number 7. Missed shipments are back. Park recorded $715,000 in missed Q4 shipments due to supply chain friction and expects even more in Q1. This isn't a Park-specific problem. It's the aerospace industry struggling to keep pace as production ramps accelerate across both commercial and defense programs. Revenue is deferred, not lost. Number 6. Park recorded $7.1 million in C2B fabric sales this quarter as defense OEMs stockpile the material ahead of anticipated production ramps. Here's the key insight. Every pound of fabric stockpiled in Park's facility will eventually be converted into high-margin ablative materials manufactured by Park. The stockpile is a preview of future, better-margin revenue. Number 5. The commercial aircraft juggernaut, as Park calls it, is no longer coming, it's here. GE Aerospace engine program sales hit $29.3 million in fiscal 2026, finally recovering to pre-pandemic levels. Park is forecasting $34 to $38 million for fiscal 2027, driven by the A320neo ramp, the long-awaited 777X certification, and a CFM LEAP. 1A market share now at 66%. Number 4. Park is planning a major new manufacturing plant, currently envisioned at over 120,000 square feet on a 20-acre site in the U.S. heartland, with room to build a second facility of equal size later. The capital budget was approximately $50 million, but management now says it will likely be more. This plant is designed to more than double Park's current composite materials manufacturing capacity. Number 3. Park is in active negotiations with Ariane Group to co-fund a C2B fabric manufacturing plant in the United States, a major strategic move to secure domestic supply of the material most critical to U.S. missile programs. Park has already advanced roughly €5 million to fund expansion of Ariane Group's French facility, but demand is outpacing even that new capacity. Number 2. The missile demand picture has shifted dramatically. Global conflicts, including the war in Europe, last June's Middle East war, and the ongoing conflict with Iran, have severely depleted PAC-3 Patriot interceptor stockpiles worldwide. In March 2026, President Trump met with top defense contractors, including Lockheed and L3 Harris, and reportedly secured commitments to quadruple production of these systems as rapidly as possible. Park's management called this a new world order for defense and said they have never seen anything like the current level of quoting activity in their 38 years in the business. Number 1. Park Aerospace holds a rare double sole source position. They are sole source qualified to supply advanced composite ablative materials for the PAC-3 Patriot missile system's solid rocket motors. And separately, Ariane Group's proprietary C2B fabric, the only material considered premier for this application, is itself sole-sourced, with Park as the exclusive North American distributor. That means to make the most critical interceptor in the world at scale, you need Park, and you need the material only Park can supply. In an era of quadrupling missile production, that's not just a competitive advantage, it's a strategic choke point. Drop your thoughts on Park Aerospace in the comments below, and don't forget to subscribe for more earnings analysis from Earnings Central.